In this Canadian real estate market update, I'm going to give you a perspective of what's happening from a national level. I'm going to give you a perspective of what's happening in some test markets and local levels and some strategies that may help you in a buyer's market, whether you're a buyer, seller, or investor. So from a national perspective, home sales activity actually climbed 3.7% between May and June of 2024 after the rate drop. Market conditions tightened and prices were higher for the first time in 11 months. The number of newly listed properties rose 1.5% month by month and led the Greater Toronto Area and British Columbia's Lower Mainland. Keep in mind, these are national statistics. Not everything resides in Toronto and Vancouver, but it's what CREA uses for national statistics. The MLS Home Price Index, HPI, edged up 0.1% month over month, but was down 3.4% year over year. The actual, not seasonally adjusted national average sales price posted a 1.6% year over year decrease in June. At the end of June 2024, there was 180,000 properties listed for on all the MLS systems, up 26% from a year earlier, but still below historical average of around 200,000 for the first time of the year. On a seasonally adjusted basis, the end of June supply number was only 0.5% from the end of May, suggesting the national inventory buildup may be slowing down. As the national increase in new listings was smaller than the sales gain in June, the national sales to new listing ratio tightened to 53.9% compared to 52.8% in May. The long-term average for the national sales to new listings ratio of 55%, with a sales to new listing ratio between 45% and 65%, generally consisted with a balanced housing market condition. Now, the second half of 2024 is widely expected to see the beginning of a slow and gradual return to buyers into the housing market. This is all information that was garnered from CREA and reflects what's happening from a national perspective. Now, I can tell you, boots on the ground, we are seeing buyers slowly re-entering the marketplace, but it is still a heavy buyer's market. The sentiment out there is a ton of inventory because people are still comparing it to where the market was at in 2022, where people were lining up for houses. And guess what? Multiple offers are actually still happening. I just had a recent sale. We had 84 showings, 6 offers, and it sold for $251,000 over asking price, and 2 recent sales in the last week that went in multiple offers for over asking on firm deals. Those are not the norm. Many buyers are still entering the marketplace, offering way under asking price, getting conditions, doing inspections, many times home sale conditions, which is great from a buyer's perspective because you can actually breathe versus the marketplace we lived in back from 2020 to 2022, which I don't think anybody actually wants to see a return to, myself included. I think there's a big misnomer that we love when a market is just flying and people can just pay over asking with no conditions. To be honest with you, at that point in time, if you come back to this exact channel, I talk about how in many instances, you're writing 10 offers to get 1 accept and you're working way harder, and it's not in the best interest of your buyers every time to go in with no conditions, especially home sale of a property or financing. So in my opinion, you can succeed in a down market and you can succeed in an up market. It really just comes down to strategy. Now let's talk about some local statistics. So we cover Southwestern Ontario, Canada, which is a great test market for the rest of Canada. London, Ontario being the hub of that. Fun fact about London, Wendy's, 3M, many national companies would use London as a test market because it has a very diverse economy and population, and it's too far from any metropolitan area like Toronto to just run there to buy a pair of shoes. So it's a great test market to see how consumers are acting, and I'll give you a little bit more insight. London is the primary market. St. Thomas, Elgin County, Sarnia, Lambton, those would be secondary and tertiary markets. So you have a great balance of understanding of how consumers are acting from an urban and a rural perspective. So I'm going to focus on a couple stats for you here. One is average price, the second is months of inventory, and then average days on market. If you want access to all of these data, just comment data in the comments and I'll get you access to our insiders newsletter where we send much more comprehensive breakdowns and reports off-market properties and invites to our private events where you could actually meet me in person, meet other investors, buyers, builders, past clients of the Prime Nation. They're a ton of fun. The last one that we just did was actually at a 1.7 acre, $2.2 million property where we had catering, we had 2 live podcasts, and a learn to fly fish experience with a world-class guide. So if that sounds like fun to you, jump in the comments and let us know. Now in London, the average prices were down, the months of inventory was 4.8%, and the average days on market was 22. In the Sarnia Lambton market, the average price was down, the months of inventory was 4, and the average days on market was 24. In Elgin County, prices were up. The months of inventory 6.4%, and the average days is 41. In the St. Thomas market, The months of inventory was only 2.9, the average price was down, and then the average days on market was 24. What does this all mean for a buyer, seller, or investor? It means from a macro perspective, you can get a snapshot of what's happening in these marketplaces, but it doesn't tell the whole story. In London, for example, there's some properties that are luxury that are $2 to $3 million that have been on the market for close to a year in many instances because there's just not that many buyers transacting at that price point right now. There's other properties like the one I just sold that was priced at $599 that sold over 200 grand over asking price that had 84 showings and 6 offers, and there's a lot of buyers for that property. It really comes down to what are you selling and where are you selling it. The average days on market I would say is closer to 38 for residential resale. For new construction, it's a completely different data set. If you want access to that stuff, again, if you're an insider, we will pull those reports specifically for you. But I would say from a macro perspective, it's an indication that people are getting super sharp with their price points. We're seeing a lot of price reductions where sellers are realizing they can't chase the market anymore. If they are not priced aggressively, buyers are not even willing to see their property, let alone offer, which is why you're seeing the decline in pricing. We're also noticing the average sales to list price ratio is still like 98%. So people that are coming in and offering 300 grand on a $600,000 property, a lot of times buyers are coming in thinking that there's blood in the water everywhere and they can offer half of what the property is listed for. Maybe that's the case if it's insanely overpriced, but properties that are priced correctly are still selling very close to asking price. Now, the month of inventory stat that I showed you varies wildly between these different markets. It's much more normal in Elgin County for it to be above 4 months of inventory because it takes longer for stuff to sell there sometimes. But in London, for example, as you see the months of inventory creeping up, it's an indication that there's a lot more inventory on market and a lot more for people to choose from. So if you're a buyer, seller, investor, I told you I'd give you strategy. What this comes down to is understanding that, are you in that zone where you're going to be pricing effectively to get an offer in time? Or are you too paranoid that you're not selling fast enough and you're not giving it a long enough sales cycle to find that buyer and sell? It's great to have data, but it's more important to have solvent interpretation of that data. And I think it's great to understand what's happening from a macro perspective, but it's much more important to understand what's happening from a micro perspective relating to your area and your transaction type. Now, there's one very unique thing that you're not going to find on any other real estate channel on YouTube. Our company does every aspect of real estate. So as much as we're talking about the Canadian real estate market from a residential perspective, we do agriculture, commercial, investment, new development, and recreational properties, as well as land development. The reason we do focused diversification started because we're in Southwestern Ontario and we wanted to feel like we could cross-pollinate across the asset classes, because guess what? You're buying a house in a great neighborhood, but somebody bought that land, developed that land, somebody built businesses in the area. Big infrastructure came, and we wanted to be a part of that so we could take the person that's building the 30,000 or 60,000 square foot commercial plaza and sell them a beautiful house in the neighborhood and have their kids grow up in the school and then buy investment properties in the area and create a holistic real estate experience. So I'm going to give you a little bit of insight that you don't normally get on these channels as to what's happening in the other aspects of real estate. From an agricultural perspective, primefarms.ca has been taking off. We're doing a lot of transactions with people that are wanting to buy rural properties and maybe get out of the city. If that's you, just comment primefarms.ca or go there. We have a separate newsletter and a separate set of data that we'll send you. And we're noticing a return to the country. People are looking for more lifestyle. And what's really cool is we're seeing entrepreneurs that have the ability to homeschool their kids, run their businesses from home, go and build entire compounds where they're still in the city 2 or 3 days a week. So maybe they live in a condo and the rest of the time they're actually at their compound running their businesses. I think this is so cool. We're also seeing large agricultural operations gobbling up a lot of land. So the agricultural space has been consistently busy, as I would say the commercial space was. Downtown cores are struggling to figure out how to get people to reinvest in downtown. They're talking about repurposing office buildings to residential because we need more housing supply. But I'm also hearing murmurings behind closed doors of people really wanting to plant their flags downtown. The recent sale that we did with the 84 showings is a great example of that. Through our marketing and even in the London Free Press article, I talked about how every city and every downtown has its struggles. A lot of people complain, they blame politicians, they talk about how cities aren't what they used to be and they don't feel as safe as they did before. Guess what? It's not unique to London, and I bet you if it's happening in your city, you would love to tell me in the comments, but we're seeing people that are looking at the 5 or 10 year plan. And one thing I said to the London Free Press was, London's one of the most walkable city, has the best music and food scene. For a little city in the middle of nowhere, we have seen insane acts. I've seen Jay-Z here, Red Hot Chili Peppers. I know Nico is heavily involved in the music scene. Mike Manuel, shout out to the London Music Hall, and so many other people that believe in the downtown core are putting their heart and soul back into it. And I think you're gonna see a return to that. Now they're battling with developers who are doing beautiful projects on the proximity of the city. We just did the Longevity Lounge behind me for Christian Vem. It's a hot sauna and cold plunge facility. Unbelievable, definitely check it out. We did Millar's Law out at West Rock. I can go on and on about different commercial mandates we're doing throughout the city. Our commercial team is selling plazas. We just did a big sale just south of the 401 highway. Commercial activity is very active, especially in the retail, in the AAA space. But I think you're gonna see a little bit more competition with the economics of what it's like to invest in downtown. The amount of land deals that's been hitting my desk would absolutely blow your mind because new construction isn't selling as much as it was before, but I can already smell that that's turning around, and we're getting calls for people that are looking to plant seeds for the next 3, 5 to 10 years. So watch for continued commercial activity. In the investment game, multifamily is still popular. Obviously, people have had their struggles with the landlord-tenant board issues over the last couple years. But as the pendulum swings, I think you're gonna see a return of people looking for deals. And there have been people that have had properties for 10 or 20 years that don't wanna wait another 5 or 10 to extract their capital out of it. They know they're not gonna see a return to 2020 to 2022 pricing anytime soon. So they're taking their chips and they're repositioning them. Great opportunity for good investors that wanna get into product that may not be able to in 5 or 10 years as we see a return to the marketplace. The big question I have for you in this market update is, how is your real estate market doing, and how do you think Canada's real estate market as a whole is going to perform over the next year, 5 or 10? Are you bullish or bearish? I would love to get a pulse from the audience. I'd also like to know what other information you want on these market updates. I love doing them. We have an amazing research team here at Prime, and I would love to put them to work for you. And like I said, if you ever want to meet us face-to-face or work with us, connect with me below. Would love to make you part of the Prime Nation and show you what we can do. Thanks for joining us on another market update, and I'll see you on the next one.